Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscriber at all. I only invest money for myself. So if anybody sends you an email or tries to slide into your DM on Instagram and say that they're me and start asking you to send them money to invest in some crypto scam or some Forex scam or some day trading scam, you'll know that's not me, because I don't do any of that stuff. I don't talk about any of that stuff on the YouTube channel. So if I don't talk about it on the YouTube channel, guys, it's not me. Just please understand that. I'm not going to slide into your DMs on Instagram or send you an email talking about stuff that I don't talk about on the YouTube channel. That's a dead giveaway that there's somebody trying to scam you. I don't care if they say they're me, they got my picture. You know, if they start talking about crypto, if they start talking about day trading, if they start talking about Forex trading, that's not me, because I do none of that stuff on the YouTube channel, right? We talk a little bit about crypto, but not from a perspective of, hey, send me your money. I got this great crypto project I'm working. No, y'all know I don't even rock with crypto like that. Not at all. I don't rock with crypto like that at all. So just be careful, guys. Please be careful. Do not allow these people to slide into your DMs or email you pretending to be me and you fall for it. Please do not do that. Having said that, do me a big favor, get down to the description box, click on that Instagram link, Richard Fain Millionaire Mentor Instagram page. That's the new Instagram page that I had to create a couple months ago because my old Instagram page was shut down by Instagram. I guess a lot of scammers. So do me a favor, if you use Instagram and you want to rock with me on Instagram, go down to the description box, click on that Instagram link, give me a follow, and then send me a DM to let me know you're rocking with me so that I can say thank you. I really appreciate that, guys. Do me that big favor. Also, down in the description box is the new website address for Richard Fain Millionaire Mentor website. It's www.richardfain.net. Go check out the website. Over 30,000 of you guys have already checked out the website. So thank you very much for supporting me, just like I support you. That's how this thing works, guys. People, I get comments sometime down in the comment box. Y'all know I don't rock with the comments that much because, when you make so much content like I do with so many videos being put out, it's just hard to try to sit here all day and look at every comment. So I don't rock with the comments that much, but I do look at them occasionally. So I've gotten a couple of them where, I like your videos, but you're always talking about your website. You're always talking about, listen, guys, listen, please listen to this. Hopefully the 2% of y'all that complain, I know 98% of y'all don't complain, but the 2% of y'all that do complain, let me just walk you through something. This is my YouTube channel. I get to put on my YouTube channel what I want to put on the YouTube channel, right? That's fair. Now, here's what's fair on your side. If you don't like what I put on the YouTube channel, you can go find another YouTube channel. I'm not sure why that's so hard for people to figure that out. Figure out, I'm going to put whatever I want to put on my YouTube channel. If I want to promote my company on my YouTube channel, I'm going to do that. I'm not sure why people can't quite put those two together. It's my company. It's my YouTube channel. I'm going to promote my company on my YouTube channel whenever I want to promote it. I don't understand why that's a tough for 2% of the people that watch my channel to understand. Oh, I don't want you talking about Mumu. I don't want you talking about your website. What do you mean? This is my YouTube channel. This is mine. I created it from nothing. I can talk about whatever I want to talk about. If you don't like that, then you don't have to watch the channel. Many people don't. I'm okay. You guys know I don't get millions and millions of views on my videos. I'm okay with that. If I wanted millions and millions of views, then I would pander to everybody. I don't do that. I do what I want to do because it's my YouTube channel. So please, guys, understand that. And I'm not trying to be hard. I'm just trying to get you to understand this is my YouTube channel. You have a choice here. The choice is you can come to my YouTube channel and know Richard Fain is going to promote his company, his products on his YouTube channel. I'm not going to put them to the back or all this other stuff so that I can appease you. No. If you don't like what I say at the beginning of my videos, in the middle of my videos, at the end of my videos, to promote my company, to promote how I take care of myself, how I take care of my family, if that's not something you want to listen to, then hey man, go find another YouTube channel. And I know 98, 99% of you guys get that concept. But for some reason, some folks don't get that concept. They don't get the concept of, oh, okay, this is Richard Fain's YouTube channel. He should be able to make whatever content he wants. I'm not hurting anybody. I'm actually helping people. But see, some people, all they think about is them. They don't care about what I go through or what I want to get accomplished. They don't care about that. All they care about is them. Guys, that's not how it works with me. And most of you know that. I march to my own beat of my own drum. I march to my own beat of my own drum. I don't do what everybody else does. I'm going to do what I want to do. Okay. Now I know enough of that. Let's move on. I had to get that out of my system. Y'all know when I'm a little bit struggling with something, especially when it has to do with my YouTube channel, I'm going to come to the congregation. I'm going to come to my YouTube congregation and make y'all aware of that. So please, if you don't like me mentioning my website, if you don't like me mentioning Mumu, if you don't like me mentioning Instagram, don't watch my channel. Fair? Okay, let's move on. Now, now that I said that, back to the website. Get yourself down in the description box, click on the website link, check out the digital products. Many of you have. Thank you very much for investing in yourself, right? We have people investing in themselves every day on the website through the digital products. Great digital products to help you with your mindset, help you with credit repair, help you with stock market investing, help you with real estate investing, et cetera, et cetera, et cetera. So check that out. And then if you really want to step it up a level and really get committed to getting yourself to your pot of gold at the end of the rainbow, check out the membership club through the website. Check out the membership club. Many of you have already signed up for the paid membership club. We're going to be kicking off the membership club live streams the week of May 6th. I don't know why I get March and May mixed up. May 6th, the week of May 6th is when we're going to be kicking off the 90-minute live streams that we'll do every week in the membership club. Those will be the new Q&As. I won't be doing any more Q&As on the YouTube live streams on Sunday like I normally do. I'm doing away with that. All of that will be in the Q&As will be in the membership club, the paid membership club. So if you like the Q&As, you want to be a part of a group of people who are going to be like-minded and discussing wealth in detail with me, not the reporting style live streams that I do now, but more of a Q&A live stream that we'll do once a week, 90 minutes, then definitely consider signing up for the paid membership club through the website. Last thing we're going to talk about, then we're going to get into the meat and potatoes, is Mumu. That's right. I'm okay with that. I'm okay with talking about Mumu, and I'm going to talk about Mumu every single day on my YouTube channel because it's my YouTube channel. If you want to rock with me and get yourself 10 free fractional shares of the Magnificent 7 stocks, then get down to the description box, click on that Mumu link. You put $100 in your new Mumu account, guys. They're going to give you 10 free fractional shares of the Magnificent 7 stocks. And then you can take that $100 or that $200 or that $500 on a monthly basis and continue to buy the Magnificent Seven through fractional share trading on the Mumu app. That's the way you build wealth, guys. And you just do that over and over and over for the next 10 years. Also mix in an S&P 500 ETF like SPLG, right? So go 50% SPLG and then maybe do 50% the Mag 7. Between those two guys, let me tell you something. In my opinion, you will build wealth if you do it consistent. It starts with the Mumu brokerage app. For those of you that want to rock with it, get down to the description box. If you don't want to rock with it and you got your own brokerage account and then do it there. See, I'm only talking to the people that want to rock with me on the Mumu app. I'm not trying to convince nobody else who don't want to use the Mumu app to use it. Don't use it if you don't want to use it. But you want to rock with me and you're going to have questions about it, then get down to the description box and click on the Mumu link and sign up and put you some money in there and start buying SPLG and the Magnificent Seven through fractional share trading and go ahead and build you some wealth. And then I'm gonna take it one step further. I'm gonna send you a Mumu tutorial video to walk you through how to use it, how to make your first trade. So if you're not good with brokerage apps, send me an email once you sign up and I'm gonna send you a tutorial video to show you how to use it. All right, fair is fair? Great, let's move on. Today, we got a lot to unpack, guys. Federal Reserve and the White House are gonna be taking some wealth for some people. And I'm gonna tell you why. The good news is they also can transfer that wealth to other people. Not only are they gonna take wealth from somebody, they can transfer that wealth to somebody else. And guess who they're going to be taking the wealth from? They're going to be taking the wealth from the 1%. And they're going to be giving the 99% the opportunity to capture that wealth. So they're going to take the wealth from the 1% and they're going to make it available to the 99% to be able to capture that wealth or snag that wealth or transfer that wealth. I'm telling you, that's what's getting ready to happen. Stay tuned. We're going to run you through exactly how that's going to happen. We know the Federal Reserve is meeting today, right? April 30th. They're kicking off their two-day meeting today. And tomorrow, May 1st, they're going to make a determination on interest rates. That's the big central key issue for this two-day meeting. Is where do they stand on interest rates? Are they going to increase interest rates to continue to fight inflation? Are they going to hold interest rates steady, right? Or will they reduce interest rates to kickstart the economy? Some of y'all might say, well, why would they need to kickstart the economy? The economy is booming. That's what they say on TV. That's what they say on the propaganda machine, that the economy is booming. Well, I'm not sure if you saw the first quarter GDP report that came out last week. I'm not sure if you saw that, but if you saw it, or if you've been paying attention to my live streams when I covered it, you will know the economy is starting to shrink. See, if you go look at the GDP numbers from fourth quarter 2023, GDP was more than 3%. So that means the economy grew in the fourth quarter of last year. The economy grew over 3%. I think it was like 3.4, 3.6, something like that. That was just in the fourth quarter of 23, guys. Fast forward to the first quarter of 24, it shrunk to 1.6 growth. So it goes from 3.4 to 1.6. That's not a good sign. That means the economy is shrinking. It's not growing as fast. It's not growing as fast. And why is it not growing as fast? Well, let's dive into that. Let's dive into our first story here that kind of walks us through, and it sets the stage for how this wealth is going to be transferred. We're going to talk about that as well. White House and the Fed, they're looking to transfer some wealth to some folks. They're going to crash wealth for the 1% or a portion of the 1%, and they're going to pass it on to whoever wants to take it. Why not you and I? We can take it, but we got to pay attention, and we got to know how to take it, and we got to be prepared financially in order to take it, right? Okay, here's the headline. The U.S. economy is already in a recession. What do you mean they're in a recession? Well, guys, I just told you GDP, which measures whether the economy is in a recession or not. See, here's what you got to think about. 2 quarters of negative GDP, technically, we're in a recession. Go look it up on the $1 trillion research lab. If you think I'm lying, go look it up. Go look up what's the definition of a recession. It's 2 quarters of negative gross domestic product, negative growth in our economy. That is the technical definition of a recession. U.S. economy is already in a recession, and it's following the same path as China by becoming reliant on debt. How much debt do we have here in the United States? Anybody know that in the chat? Anybody been paying attention over these last couple of months when I've been talking about our debt load here in the United States? How much debt do we have in the United States right now? Anybody know? No, much more than 1 trillion, much more than 31 trillion, but good answers. It's about $34 trillion, guys. That's our debt. That's what we owe the world, including U.S. citizens, including U.S. corporations and other countries. We owe about 34 trillion. Can anybody in the chat tell me 10 years ago, what was our total debt? It was about 18 trillion. Now it's skyrocketed up to 34 trillion. Can somebody tell me by 2054 what they're projecting our total debt to be? I'll help you out. About $140 trillion. Yeah. So needless to say, there are people out here who believe we're already in a recession and we're heading to catastrophe. I don't tell you that to scare you. I'm just telling you because that's an opportunity if you know how to turn it into an opportunity. Pay attention, and I'll show you how to turn this into an opportunity, AKA 2008. You know how many people got rich and wealthy in the last 2008 great financial crises? You know how many people made so much money because of opportunity and preparing themselves for that opportunity? Well, you're looking at one of them. Bulk of my wealth was built from 2008 to around 2019 by buying assets at heavy discounts and holding those assets to maturity, holding those assets till they traded at a premium again. See, I bought them at a discount and I just held them. That's how the Fed and the White House will assist you in building your wealth. They're going to create a catastrophe. It's already happening. Now, you can look at that creation of a catastrophe as, oh, woe me, how am I going to make it? Or you can look at it as, okay, that's an opportunity for me to get rich. They just created an opportunity for me to transfer some wealth to me and my family. You can look at it how you want to look at it, guys. We all got choices, right? So let's look at this. The U.S. economy is already in a downturn, and it could be following in the footsteps of China as the government assumes a growing amount of debt to prop up growth. What do they mean by that? See, they take on more debt, they pump more money into this economy to grow it, but they're growing it with debt. They're growing it with debt. It's not organic. It's debt that's being created. They pump that money into the economy, but the debt continues to rise. Even if the economy does okay, the debt continues to rise. So at some point you get in trouble, right? The chief strategist for Q1 Research has said for months that the U.S. economy is already in a recession, despite Wall Street's upbeat outlook for a soft landing. But a downturn is evident in the weakening job market. Always comes back to that job market. Why is it always coming back to the job market or the labor market? Because they know that's the only thing left that Americans have that's propping them up and propping up this economy. That's it. The job market is the last thing to fall. If it falls, it's going to be catastrophic for a lot of people that are not prepared. That's why I always tell you guys, prepare for the worst, expect the best. Now is the time to prepare when times are good. You prepare for bad times when times are good. Now is the time to prepare. You can't prepare for bad times when you're in the middle of bad times. That's not a good strategy. No, that's not a good strategy. A good strategy is when times are good over here, where jobs are plentiful, where I can make as much money as I want to make, prepare for bad times. We know bad times are coming. We know that. Why not prepare for it, right? While Wall Street's upbeat outlook for a soft landing. What's a soft landing? What is a soft landing? That means the Fed is able to bring down inflation, but our economy stays rock solid and continues to grow. That's a soft landing. A soft landing is where the economy continues to grow, but inflation continues to go down. That's a soft landing. Right now, a lot of people don't believe we get that soft landing. A lot of people believe it's going to be a bumpy landing, a rough landing. What does a rough landing mean? Recession. You bring inflation down, but the economy goes into a recession in order to do it. See, that's a bumpy landing. Yeah, that's not good. That's not good. That's a bumpy landing. But a downturn is evident in the weakening job market, Booth said, pointing to recent downward revisions in monthly job growth figures. The job market remains on solid footing by historical standards. The economy added a more than expected 303,000 jobs in March, while the unemployment rate remained near a record low. But new payrolls were revised slightly lower for the month of February, falling to just 270. Meanwhile, layoffs and unemployment have inched higher in recent months. I've already told you guys, year over year, unemployment is up from 3.4% to 3.8%. That's year over year. So when you go look at last March 23 or April 23, and you look at April 24, it's up by 0.4%. That's basically what the guy is saying, right? And he also understands that's the last leg standing for most of us is our job, right? The job market is, the hot job market is the only thing keeping us from a deep recession, right? A deep recession. Unemployment has inched up higher in recent months, with total discharges rising to 1.7 million in February, according to the Bureau of Labor Statistics. These revisions, they keep pushing us back further and further from where we thought we were. It seems like every time companies report their earnings, they're doing it with a kicker that says, hey, we're going to lay off 2,000 people or 1,500 people or whatever it is. I just saw a story earlier today when I was researching this, where Tesla is laying off some of its executives. It's like, I don't know if they're the high ranking executives, but like middle management executives. They're laying them off. That's what the guy is saying. And that's what a lot of tech companies have been doing, especially in the tech industry. They've been starting to lay off a lot of this fluff. I saw another story where the average Facebook employee makes $374,000 a year. I think I read it yesterday. The average Facebook employee across the board makes about $374,000 a year. Can you understand why, as AI artificial intelligence ramps up, can you imagine those people making that average of three? They're going to get rid of those people. You already see Tesla and Meta, and we're going to read a little article here in a minute about NVIDIA and how other Magnificent Seven companies are looking to NVIDIA to create more AI so that they can, I'm telling you guys, as this AI thing ramps up, be careful. Some of y'all gonna lose y'all's jobs. I'm telling you, it's happening. This is what this guy is saying. It seems like every time companies report their earnings, they're doing it with a kicker that says, hey, we're going to lay off 2,000 people or 1,500 people or whatever it is. Layoffs could end up rising from 150,000 to 370,000 by the end of the year. Other economists also foresee a weaker labor market, which raises the risk of a recession. That's the only thing keeping us from a recession. Well, how do I create wealth, man? I mean, I understand what you're saying. I know, but how do I transfer wealth? Well, guys, I just told you. That's when wealth is built, is in a recession. A lot of wealth is built in a recession. But you got to be prepared. While times are good right now, prepare. I've already told you guys, you need to do a financial cleanup. You need to do a financial yard sale, a financial carport sale, a financial attic sale, a financial storage unit sale. You need to be preparing. You can't take advantage of any of this if you ain't got no money. You do know that, right? There ain't no IOUs. Okay, give me 250 shares in NVIDIA and I'll pay you next week. Give me 250 shares in NVIDIA. Let's put it on layaway. Let me give you $15 and I'll pay you. No, that ain't how it works. You got to have money. You got to have investable assets. How do you create investable assets? Number one, you got to have multiple streams of income. Keep telling you all that. You got to have multiple streams of income, side hustles, multiple streams of income. Right now, when times are good, is where you prepare all of this stuff. Not when you throw it into a recession and you're knee deep in a recession and then all of a sudden, oh, how do I create side hustles? Too late. Too late. Now is the time to prepare. I'm telling you what could be coming. Well, what if it never comes, Richard? So what? Build wealth anyways. You already got the side hustles. You already got your financial house in order. Build wealth anyways. See, you win both ways. This is what I keep telling you guys. Always prepare for the worst, expect the best. If this recession does truly come, if the labor market does truly soften, it's one's coming. If the Fed cannot see a path to 2% on inflation, they're going to increase interest rates, which will force us into a recession. That's the bumpy landing. They got to. They got no other choice. They will have to raise interest rates and force us into a recession to get inflation down to 2%. If that's their mandate, if they're hell bent on 2%, they may have to do that. They won't do it today or tomorrow, but they may have to do it. Prepare, right? Prepare, right? The economy could enter a hard landing. Remember I said bumpy, hard, rough, however you want to say it. It's all the same thing. Bumpy, hard, rough. The economy could enter a hard landing by the end of the year. So guess what? It's April. Matter of fact, it'll be May tomorrow. He's saying end of the year. Let's say fourth quarter. We can't get inflation down to 2%. Matter of fact, it keeps inching upward. And the Fed makes the tough decision to increase rates. And nobody believes they'll do that. No, yes, they do. You haven't been paying attention to me then over the last few months. Guess what? The CEO of the largest bank in America, JP Morgan Chase, said that interest rates could go as high as 8%. He's talking about the Fed funds rate. It's 5.5% now. This is the CEO of the largest bank in America. Also, one of your huge billionaire hedge fund guys. He said it could go up to 6.5%. So don't think there aren't people out there who believe this is possible. Go do your history. Go do some history on interest rates. Go do some history on how high interest rates were in the 70s and the 80s. Guys, I'm not saying we'll get there. I'm just telling you, prepare. Prepare. The economy could enter a hard landing by the end of the year and cause the unemployment rate to surge to 5%. What is the unemployment rate right now? 3.8. Guys, 5% unemployment rate is catastrophic. It's catastrophic. That's why I'm telling you, get your financial house in order, get your cash ready, get your cash reserves ready. All this crap that you own, sell it. Sell it. If it has value attached to it, sell it. I got my financial house in order. I got my cash reserves. I got my investments. And I'm ready to go. I've been telling you guys over the last week or so, I've given you 2 or 3 positions. Because a lot of people, oh, golly, you never tell us what you're doing. You never tell us how you make money. I told you NVIDIA a week ago. I told you on a Friday. NVIDIA just closed, guys, no, I did. I told you on a Saturday morning. I said, guys, NVIDIA just closed at 762. This was a Saturday morning live stream. I said on Monday when the market opens, I'm all in. That's exactly what I said. But I never tell you nothing. I never say nothing. I never recommend. See, this is what I'm telling you though, guys. We got to stop making these excuses. If you're locked in and you're trying to build wealth, lock in. All this casual viewing, oh, I might watch him once a week. I don't know. He talks about his commercials too much. He talks about his website too much. He talks about Mumu too much. I can't focus. I can't focus when he talks about Mumu. I can't focus. Bunch of crap, right? That's an excuse for you not to pay attention. It's an excuse for you to go do something that don't require you to do nothing. Just be honest with yourself. It's an excuse for you not to do anything. It ain't got nothing to do with Mumu. It ain't got nothing to do with my website. It's you don't want to do nothing. And I'm 2% of y'all. 98% of y'all rocking and doing what you need to do. 2% of y'all, but I gotta talk to the 2% too, guys. I guess can't talk to the 98%. I gotta talk to the 2% too, right? Right? So check it out. The economy is already in a rocky position, especially considering ballooning U.S. debt levels. The government debt taking makes the U.S. economy look precariously similar to China's, where state-owned enterprises once accounted for as much as 60% of the GDP. It is not different in any way, shape, or form, Booth said, of the similarities between America's and China's economy. Right now, the public sector is sucking the life out of the private sector. Some strong words, guys. The public sector would be the government. The private sector would be companies, right? We have to spend less as the country. We have to spend less as a country to let the private sector really come out and drive the economy. What they're basically saying, the government is driving the economy, not the private sector. They need to let the private sector drive the economy more and step back, reduce debt, step back, and let the private sector drive the economy. The federal debt balance is at record high, $34.5 trillion, according to the Treasury Department. This is not some, regular schmegular analyst on the corner who just started. No, this is the U.S. Treasury saying this. This is the data. This ain't Richard Fain saying it. It's the data from the U.S. Treasury Department. Ballooning debt levels could eventually spark various problems for the economy, experts have said, including higher inflation, greater market volatility, and a lower quality of life for Americans. I think we're already in this lower quality of life economy that most of us live in down here in this bust economy, this cesspool economy, as former President Trump calls it. Most of us live down here. Most of us are participating in this bust economy, not this boom economy. That's where it's critical that we transfer wealth to some of the people in this bust economy. But you got to be prepared to receive wealth. See, you got to prepare yourself for wealth, guys. A lot of us are not prepared for wealth. We're not prepared. We're not prepared. A lot of us are not prepared for wealth. We're just not. So if somebody gave us wealth, we'd give it back to them. We're not prepared. What do you mean? Somebody gave me $1 million, I wouldn't give it back to them. Yeah, you would. Because the first thing you're going to do, go buy a big car. You're going to go buy some designer clothes. You're going to give money to everybody in your family. You're going to buy a big old gigantic house. You're going to take some trips, right? Y'all know I'm telling the truth. Joe get $1 billion, that's exactly what they going to do. Next thing you going to know, you're going to wake up, you ain't got no million no more, and you got all these things that mean nothing. See, you got to prepare yourself mentally to receive wealth, guys. You do. You got to prepare yourself to receive wealth. Here's the question. Are you prepared to receive wealth? If you got $1 million tomorrow, what would you do with it? What would you do with $1 million if someone knocked on your door? Is this Richard Fain residence? Yeah, that's me. We got $1 million for you, Richard Fain. What? What? You gave me $1 million? Oh my goodness, boy. Let me get on my phone. Pookie, y'all got to come over here, man. These people just bought me $1 million. Boy, we finna get it. Boy, we rich. We rich. That's what I do. Unless I'm prepared for the wealth. Much different now, right? Much different if I'm prepared with the wealth. Hey, Richard, I got $1 million for you. Oh, great. Oh, that's all my hard work is paid off. Let me take this $1 million. Let me parlay this $1 million to $5 million. No, ain't buying no fancy cars. No, ain't buying no big house yet. Let me parlay this thing to $5 million. Then we'll think about some of that stuff. Let me take this $1 million. I ain't finna do nothing stupid with it. I'm gonna take it and I'm gonna parlay it into more. See, that's why I mean you got to be prepared for wealth. One way you squander the wealth. The other way you multiply the wealth. Get it? Now, how do I bring that back down to just a regular person's level today? Let's say you got a job. Times ain't hard yet, guys. Let's say you got a job. You're making good wages, but you got some free time. You're thinking about, hey, how do I take this wage that I'm earning and build wealth with it? How do I create me some side hustles and build wealth with it? No, I gave you the hypothetical of the $1 million, somebody knock on your door, but we know ain't nobody gonna give us no $1 million, right? So how do we create our own wealth? We got to take our income. We got to create more income. We got to sell everything that has value that's not putting money in our pocket. We got to sell it and create more income. We got to pay off debt, consumer debt, credit card debt, high interest rate car loan debt. We got to pay that off. We got to side hustle our butt off until we can pay that off. I get people, oh God, I got $10,000 in credit card debt and I don't know how to get out of it. I know how to get out of it. Go get you some more income. That's how you get out of it. What do you mean you don't know how to get out of it? You got $10,000 in credit card debt and you don't know how to get out of it. Yeah, you do. Go get you some more jobs. Go drive Uber. Go do something. What are you doing with that 7, 8, 9 hours a day that you ain't doing nothing but casually flipping through your phone, watching TV, in other folks' business? Take them hours and create some income and pay off this $10,000 in credit card debt. That's all you got to do. It ain't that hard. This is not the SAT. This is not an algebra test. No, this is pretty easy stuff. I got $10,000 in credit card debt. I got 5, 6, 7, 8, 9 hours where I'm doing nothing but being a consumer, eating potato chips on the couch, doing whatever we do when we're not productive. I can take those hours and become productive and pay off this $10,000 in credit card debt ASAP. I can pay it off in a month. 2 months, I'm done. Now I direct all my efforts to building wealth, getting myself ready to build wealth. But see, a lot of us don't want to do that because it's hard. It requires us to get uncomfortable. And we don't want to get uncomfortable in this society. We've been taught, listen, you shouldn't be uncomfortable. No, you should never be uncomfortable. No, you will get uncomfortable if you want to build wealth and prepare yourself for this wealth. And it's coming. It's coming. It's coming. Experts have said, including higher inflation, greater market volatility, and a lower quality of life. I think a lot of us right now are already experiencing that lower quality of life. Guys, you got to be experiencing lower quality of life if you're living paycheck to paycheck. If you got high interest rate credit card debt, if you're being strangled by high monthly payment on your car, and it's upside down in value, you owe more than it's worth. That's not a high quality of life. See, a high quality of life to me is when I'm debt free, I'm living on less than what I make, I'm saving and investing, I don't have to worry about money. I get to do the things that bring me peace, bring me a higher quality of life, where I'm giving my time, where I'm helping somebody, or I'm doing things that provide me happiness. See, that's a higher quality of life. But I don't get there if I'm making the wrong decisions with my money. I don't get there. Matter of fact, I'm living a lower quality of life. Why? Because I'm stressed. When you have financial stress in your life, guys, it's not possible to have a higher quality of life. When you got financial stress in your life because you living on more than what you make and these bills are piling up, you don't know how you're going to feed your kids. You don't know how you're going to get this car fixed because it just broke down and it's $1,000, $1,500 to fix it, and you don't got no extended warranty. And even if you got the extended warranty, it was a ripoff, because you know that's just a ripoff. See, when that stress level goes up, that's a poor quality of life. That's a lower quality of life. No one wants that. Who wakes up in the morning and says, you know something, today, boy, I'm going to strive to have a low quality of life. That's going to be my number one priority today. I want to get as low as I can get. No one says that. Nobody. Out of the 8 billion people on this planet, no one wakes up and says, I want a lower quality of life today. They don't. They don't. They just don't say that. So here we go. Let's move on. Let's move on to the White House. How is the White House starting to clamp down the hammer on the wealthy? And does it create an opportunity for us to grab some of that wealth? I think it does. Here's what the White House is doing. Here's the good old White House. Good old Joe. Right? Good old Joe. Here's good old Joe. Let's see here. Let's talk about my main man, Joe. My main man, Joe. He's something else, ain't he? But here you go. My main man, Joe. Because he is trying to increase the capital gains tax. And yeah, it ain't good. Well, let's take that back. It could be good. It could be good for folks that are trying to build wealth, right? It could be. Let's see exactly what he is trying to get accomplished here. I was reading this article about him and with this capital gains tax, and it ain't good. It ain't good. It ain't good for the 1%. It definitely ain't good for the 1%. So let's take a look and see what he's trying to get done here. And I think if we do that, it might put us in a situation where we are ready. So it says right here, Americans overwhelmingly reject Biden's plan to tax unsold assets, right? In case you missed it, a $5 trillion tax hike looms over American households and businesses in President Joe Biden's latest budget proposal, which would include 25% annual minimum tax on unrealized capital gains for individuals with incomes and assets exceeding 100 million. Well, that ain't none of us. That's why I try to tell you. They try to help us get rich, because that ain't none of us. I don't know who that is, but it ain't me. And I guarantee it ain't nobody watching my channel. I can promise you that. I can promise you there ain't nobody watching my channel. So it's an opportunity for us, right? Joe Biden's latest budget proposal, which would include a 25% annual minimum tax on unrealized capital gains. Not realized, not stock you done sold and get this big windfall. It's unrealized. Or Joe's something else. For individuals with incomes and assets exceeding $100 million. That ain't none of us. That ain't us. That's the 1%. That's the 1%. If signed into law, this could increase top marginal rate on long-term gains and dividends to a jaw-dropping 44.6%, marking the highest such rate in U.S. history. That's crazy, right? So that's the 1%. That's the White House squeezing. Now, it's a proposal. Will it become law? Who knows? But that's Joe's attempt to squeeze the 1%. That's his attempt to squeeze wealth from the 1%. And that creates an opportunity for the 99% to capture some of that wealth. Biden's plan proposes other changes to the tax code, but I want to focus on the part involving unrealized gains, since it could have sweeping unintended consequences for the U.S. economy. Back to the U.S. economy. Back to the U.S. economy and how that can create opportunity for us, right? How that can create opportunity for us. That can create opportunity for us. Personal liberty and the very fabric of American innovation. To be clear, I don't believe a deeply divided Congress would be able to find the votes necessary to approve this policy. But it's critical that people are at least aware of the potential ramifications. What gains aren't gains? So they're going to kind of explain to you what gains are not gains. The idea of taxing unrealized capital gains increases in the value of an asset like property or stocks that haven't been sold yet. It's not only unprecedented, but fundamentally flawed. Imagine purchasing shares in a company for $1 million, and next year those shares appreciate to $1.5 million. Under Biden's plan, you would owe taxes on this $500,000 gain, despite not having sold the shares or realized any real profit. What happens if it goes down the next year? Are you able to write off the loss? Right? The unrealized loss, since you're being taxed on the unrealized gain. Now imagine that the stock's value drops back to $1 million the following year. You've already paid 25% on a gain that existed only on paper. And now you're also left shouldering a financial burden without any actual economic benefit. You can see how this policy might not go over well with the investment community, basically the 1%. It wouldn't go over well with the 1% because all us 99%ers, none of us got $100 million. I don't have $100 million. I don't know anybody else that would be listening to my live stream that has $100 million. So really, Joe is trying to squeeze the rich. He's trying to squeeze some of that wealth out of the rich, right? To help pay for this 34.5 trillion in debt we have. That's what Joe's trying to do, right? But that creates an opportunity for us. Why? Because if something like this is passed, it's going to have a really, really traumatic effect on the economy. And a lot of these rich folks may decide not to buy assets. They may decide to buy assets outside of the United States, which creates what for us? An opportunity to buy assets in the United States. Now, again, I'm not saying this will get passed, but if some version of it gets passed, right? I think it helps the 99%. That's my opinion, right? I think it helps the 99%. I think it helps the 99% to be able to have a better position at buying assets and not have to worry too much about the 1%, right? That's what I think. That's just my opinion. You guys drop your opinions down in the comment box if you'd like to, right? You can see how this policy might not go over well with the investment community, as influential entrepreneur Anthony Pompeo tweeted last week. If they want to collect unrealized gains, we're going to need refunds on unrealized losses, right? So that's been one of the things that, you know, and a lot of people say, well, golly, is this Joe just trying to position himself to get some votes from the 99%? Because clearly he's not going to get any from the 1%. Is he positioning himself to make himself look good for the 99%? Because clearly we know the 1% won't be really voting for him, right? Committed that wealthy investors who simply employ a special strategy to minimize the impact of this additional tax burden. Rich people, he says, will just take more loans against their portfolios, knowing that the interest they pay on those loans can be deducted. So he's saying rich people just shift to real estate. Now, a lot of people already invest in real estate, a lot of rich people, a lot of 1%ers, but he said more of them will, because that's how you beat the system, right? So I keep telling you guys, real estate portfolio is a nice way to reduce your tax liability, especially if you got money. I was talking to one of my subscribers. She did a one-on-one with me yesterday. Matter of fact, this was her second one-on-one with me. And her and we were talking about, she's in her 70s. Sharp though, sharp. Have been very successful, sharp. But we were talking about, hey, I got a big lump sum of money, and I'm trying to figure out how I need to invest this money. And then she mentioned her real estate portfolio. She said, yeah, oh yeah, I got real estate so that, you know, I got a lot of money coming in monthly from other sources, and I reduce my tax liability on that other money coming in from like my pension, Social Security, and interest earned off my investments. I reduce my tax liability on that income through my real estate portfolio. She's thinking like the 1%, guys. See, this is how the 1% roll. She's thinking like the 1%. She got a real estate portfolio that helps reduce her tax liability on her income, right? See, that's what I mean by you got to position yourself, guys, and get yourself ready to build wealth. You got to understand some of these strategies. She understood that. So her and I had a really good conversation about some things she could do to, right? She's in her 70s. Here's some things you can do to reduce your exposure to losing your principal, but also get you a decent income off of it and guarantee your principal. That's the conversation her and I had at her age. Here's how you keep your principal guaranteed. Here's how you earn some income, right? Still got some upside. You'll still outpace inflation, but you'll also protect your principal. But guess what? She's already in the enjoyment stage of wealth. I would have a much different conversation with someone who's in the building stage of wealth. She's already in the enjoyment stage. She needs to protect her wealth, not grow it. She still wants to grow it, but protect it more than grow it. When you're in the building stage of wealth, you want to grow it and not worry so much about protection, right? You still protect yourself by putting yourself into big boy, blue chip, historically proven assets, but you also grow it. So that's what Joe is trying to get done. This 44% capital gains tax on the wealthy, right? That's what he's trying to get done. You probably won't be surprised to learn that Americans overwhelmingly oppose the taxation of unrealized gains, right? Well, I don't know who opposes that, because most Americans don't even have retirement savings. You got 150 million Americans don't even have retirement savings, so I'm not sure who's opposing it. What are you opposing? You don't even have no capital gains. You don't even have no real unrealized gains. You have 150 Americans don't have no retirement savings, none. So I'm not sure who opposes it. It's the 1% that oppose it. It ain't the 99% because most of us don't have that kind of money. We don't have no $2, $3, $4, $5 million that we worried about unrealized capital gains tax. Again, you got to have over $100 million in assets and income to even be a part of this. None of us got that. See, but this is how the 1% try to trick you to fight for them. Well, what do you mean they're going to tax us 44% on our unrealized? Listen, you got to have $100 million, guys, for this to even affect you. How many of us got $100 million in this chat? Please, somebody tell me who got $100 million in this chat. Nobody. I can already tell you that. So this right here has nothing to do with us. It has everything to do with the 1% and trying to start transferring that wealth from them. Because at least Joe Biden and the White House, they realize there is a wealth gap in this country and it's getting worse. It's getting worse. These people who are in the 1% are getting wealthier and wealthier and wealthier. These people down here in the 99% are getting poorer and poorer and poorer. There won't be a middle class at some point in this country, guys. There will not be a middle class. It'll be the rich and wealthy and the poor. There won't be no middle class. You better pick sides. I'm telling you now, you better pick sides. 2021 study found that Americans reject this policy by a 3-to-1 margin, including a significant 76% of independent voters. This is the trick the propaganda machine play on us, right? No, they should tax them. That's how you're going to get wealth distribution. In my opinion, you got to tax them. You got to hurt them where the pocketbook is so that some of this wealth can transfer. If you don't, it won't transfer. So I think the White House is trying to help. Now, will they get it passed? Probably not. But I like the effort. They won't get it passed. But I do like the effort of them trying to transfer wealth to the 99% by creating opportunities for us to build wealth. That's what it is, guys. They're not going to say, well, okay, Mr. Rich Guy, give me 100 million and I'm going to give it to this guy over here. Now, that's not what they're trying to do. They're trying to make opportunities for you and I to build wealth. And again, I don't pick sides. I don't care what side you own. I don't get into all of that. I'm just telling you what my opinion is. When I see an article like this, I understand, in my opinion, what they're trying to accomplish. They're trying to distribute the wealth a little more evenly. Right now in our country, it's not even. You got 1% of the population in the United States that control 99% of the wealth. How is that equal distribution? It's not. It's not equal distribution. It's not equal, guys. It's not equal. So I like the attitude. I don't believe it'll get passed. No one will pass it. But I like the attitude. I like the attitude. What y'all think about that? What do you think about the White House trying to wealth transfer or make opportunities for the 99% to capture some of that wealth? I like it. I like it. I like it. And I know a lot of, oh, it got nothing to do with that. Yeah, it do. Yeah, it do. It got everything to do with them trying to make the 1% more accountable when it comes to the wealth distribution in this country. So I'm for it. I'm for it. I doubt it'll get passed, but I do like the effort. I don't believe it'll get passed. All right, let's move on. Let's talk about stocks. Let's talk about stocks, and let's continue this conversation about the opportunity. So let me make sure you understand the opportunity here. We started off by talking about the economy and how the economy potentially could be headed to a recession if the Fed has to increase rates or if they got to keep rates higher for longer. That's an opportunity, guys, right? That's an opportunity. Why is it an opportunity? Because if we go into a recession, what happens to assets? They go down in value. That's the opportunity. If we go into a recession and we have a hard landing, what happens to assets? They go down in value. What does that mean for you and I? We are able to then go in, if we're financially ready, we're able to then go in and buy those assets at a discount. And then we hold those assets till they trade at a premium again. So in 2008, when we had the last great financial crisis, I was financially ready. I had cash. I didn't have a lot of consumer debt. I had no student loan debt. I already had a rental portfolio. I already was investing in the stock market. I already had a good paying job. I had a side hustle. So I was ready. So as soon as the crash happened, what did I do? I started buying more real estate because I could get it cheap. I started buying more stock market portfolio through paper assets because I could get them discounted. Bank of America, Wells Fargo. I just told y'all I liquidated my Wells Fargo 401k. A bunch of that 401k was built as a direct result of the 2008 crash because I just went in and bought all of the Wells Fargo stock cheap as I could buy it. And I held it for 15 years. From 2005 to 2000, matter of fact, almost long to 24. When did I start working for Wells Fargo? 2005? Yeah, from 2005 to 2024. So 19 years. I just held it for 19 years. It went from me putting in about 100,000 to cashing out at like 366,000. And I didn't make no more contributions after 2012. 2011 was the last time I made any contributions to it. What happened was all the dividends that Wells Fargo was paying on all those shares that I owned, I just reinvested them back into buying more shares. And I just did that for the next, from 2012 to 2024. For 12 years, I just reinvested all the dividends. That's that power of the stock market compounding for 12 years on dividend reinvestment. That's that drip. That's that drip investment method. Go down to the description box, click on the website. You can figure out how to do drip investment that way. Got an ebook on there that'll help you out. But my point is, that's the opportunity. The opportunity is when assets go down in value is where we can build and transfer a massive amount of wealth to ourselves. But you got to be prepared financially, right? And right now is the time to prepare. That's why I'm giving you guys all this information so that you can prepare. If it don't happen, no big deal, great. I just keep dollar cost averaging in and I just ride my investments up. How do you know they're going to go up? Well, history says they have to. S&P 500 in 2014 was 21, like almost 2,000 points. 10 years later, it's over 5,000 points. They go up in value, guys. If you'd invested in NVIDIA in 2005, if you'd invested $20,000 in NVIDIA in 2005, $20,000, 19 years later, guess what it'd be worth? $3.4 million. They go up, guys. I don't know why people, oh God, no, they go up. If they're good companies and they got a history, they're going up. They're going up. So let's talk about stocks because that's an opportunity, right? Now, again, get down to the description box, click on that Mumu link. They're going to give you 10 free fractional shares of the Magnificent 7 stocks. Again, guys, preparation, be prepared, be ready to go, right? Get down to the description box, put $100 in your Mumu account. You're going to get those 10 free fractional shares of the Magnificent 7. I use the Mumu account. That's my primary brokerage account. If you want to rock with me and you want to build wealth, check out that first link. Check out that Mumu link. Click on it. Open up that new Mumu account. Put $100 in it. Get you some free shares of the Magnificent 7, fractional shares. And now you're ready to position yourself to continue building wealth. So let's move on. Here's the headline. Stocks fall on disappointing earnings and inflation data before Fed decision. That's how we started Tuesday, guys. That's how we started Tuesday. How do we start Monday? Different. Monday was totally opposite. On Monday, yesterday, when I did my live stream and I did the same stock market update, what did I say? Stock market soared. Not really soared, but it was on the rise. It was up on Monday. Tuesday, it's down. What, Richard, why is that? Let's read on. Let's figure it out. Well, let's figure out why it did it. Because yesterday when I did the live stream, it was up. But this morning's live stream, Tuesday, one day later, it's down. It starts down. Here we go. Stocks traded into the red Tuesday after higher than expected wage data. See what I keep telling y'all? It's the data, guys, which changes the trajectory of these assets. Yesterday, it was optimism, everything's peachy keen, boom. One day later, you get wage data that's not good. What happens? Trades lower. Trades lower. So let's keep going. Stocks traded into the red Tuesday after higher than expected wage data raised fresh inflation concerns ahead of the Federal Reserve's rate decision on Wednesday. McDonald's, one of the staples in this country, shares fell after disappointing earnings. McDonald's got some competition out there. They didn't have great earnings. They fell. Now, is that an opportunity though? See, this is what I want y'all to understand. Is that an opportunity for me to potentially pick up some McDonald's stock? Knowing that McDonald's is McDonald's. Them golden arches, man. See, you got to understand something about McDonald's. McDonald's is in the real estate business, guys. Right? They're in the real estate business. They're not in the, see, you think they're in the burgers and the fries business, but really they're in the real estate business. If you look at McDonald's Corporation, if you look at where they make the majority of their income, it's off the rental income that they charge to the franchisees. That's where they make the bulk of their income. They have very few stores that McDonald's Corporation owns itself. I think they got like 2,000 stores worldwide off of about 40,000 stores. So they got about 2,000 corporate stores. The other 38,000 are franchisees that pay them rent, pay them royalties. So you got rent and you got royalties and you got marketing, all that equates to about 12% of a franchisee's top line revenue, not bottom line. McDonald's get theirs off the top. We don't care what your expenses is. We want our 12% off the top, the tippy top. So if I make $3.4 million top line revenue, that's what McDonald's gets its 12% royalty and real estate, rent and all that off of that. The higher you go, the higher their revenue is off your that 12%. It's not off net, it's off gross. That's what the business McDonald's in. The burgers and fries is just so that they can charge you they can charge their franchisees a bunch of rent. And it's steep. So, is that an opportunity? Is that something that I put on the short list and go take a look at McDonald's and say, well, golly, I know they're the #1 fast food franchise in the world. Them golden arches. There you go. Maybe, may not be, but that's worth a shot. I just gave you a little snapshot of exactly who McDonald's is. Oh no, they got the best Big Mac in the world. They sell the most Big Macs. That's not how they make money, guys. They make money off the real estate. And they make money off the franchisees paying them royalties and the marketing, all that stuff. They get like 12% off the top line, guys. That's where they make all their money, McDonald's Corporation. Go check it out. Do some research. You'll find it out. Let's keep moving. S&P 500 edged down to 0.17%, while the NASDAQ composite lost 0.27%. The Dow fell 159 points, or 0.38%. The employment cost index, that's the data that came out. The employment cost index, a measure of wages and benefits, added 1.2% in the March quarter, above the 1% consensus estimate from economists polled by Dow. Treasury yields jumped. Remember yesterday, I know some of y'all rock with me every day, so y'all know I'm telling the truth here. Remember yesterday when I started the same conversation about stocks, the treasuries, they fell. The treasury yields fell. And what? Assets The stock market went up. I keep telling y'all guys, they work in the opposite direction of each other. They work in the opposite direction of each other. Why do they work in the opposite direction of each other? Because they are competing for the same investors. See, the bonds, treasury bonds, compete for the same investors as stock market does. What is the stock market? It's made up of companies. Big companies, small companies, medium-sized companies, all publicly traded though. But they compete for the same investors. So what happens is, when big-time investors see this data that came out for this wage data came in negative, what happens? They start pulling out of the market and going where? To U.S. Treasuries. The more demand for Treasuries, the more rates go up. The less demand for the stock market, Dow goes down, NASDAQ goes down, right? S&P goes down. Less demand, what happens? More supply, prices go down. More demand, less supply, prices go up. That's the relationship between U.S. Treasuries and the stock market, in my opinion. So following that, the U.S. Treasuries jumped, right? Markets are pricing in just 1/4 percentage point cut in 24. Now, we went from 3 in March, well, January, February, March, beginning of April, we had slated for 3 rate cuts. Now we're down to 1. Here's the opportunity, right? Right now, guys, is your opportunity to be buying assets at a discount. Right now. This is where we build wealth, but we got to be financially positioned, right? I can't have $15,000, $20,000 worth of credit card debt. Can't have it. Well, Richard, how do I get out of that 20,000? Sell everything you own. That is not essential to life. I know you don't want to hear that, but that's the truth. Sell everything you own that's not essential to life. That's what I would do. If I own a house and it got $100,000 worth of equity in it, and I'm around here with $50,000, $60,000 worth of consumer debt, and on top of that, the house is choking me financially, my payment is taking like 50% of my income. So really, I'm house rich, but I'm cash and non-house assets poor. Get rid of it. I got a car that I'm paying $500, $600, $700, $800, $900. I saw a story on Instagram where a lady paying $1,400 a month for a Tahoe. She ain't paying $1,400 for no Lambo truck or no Cybertruck or one of them Ferrari trucks. She got a Tahoe, a regular schmegular Tahoe. She paying $1,400 a month for it. What in the world are we doing here in this country? I just don't even, this is a Tahoe we're talking about. How do you pay $1,400 a month for a Tahoe? Isn't that Chevy? Chevy Tahoe? I don't even know what company make Tahoes, but I don't buy Tahoes. But how in the world do you pay $1,400 a month for a Tahoe SUV? This is what I'm telling you. We got to get out all of that, get ourselves prepared to get these assets. Now is the time. Now is the time. Bottom line, this is not a number that will incline the Fed to change. There is no rush to ease stance, but not a number that will induce a we need to raise view, okay? So right now, we're in a situation where the Fed is saying, look, things ain't so bad that we're ready to increase. Things ain't so good that we're ready to decrease. We're just gonna stand at the 5.5 for right now and just pause. But you gotta understand, guys, what a 5.5% Fed funds rate, which is the highest rate, I believe in, somebody correct me on this, my math might be wrong. I think it's 40 years, or at least 20-something years, something like that. It's been a long time since we've had a Fed funds rate at 5.5%. Here's what you got to understand, even if they don't raise and they keep it at 5.5%. At a 5.5% Fed funds rate, that means all your small businesses out there that need to borrow money, they can't. Because they don't borrow it at 5.5%. You got to throw 3% on top of that. So if you want to walk into your bank as a small business owner and borrow money, it's going to cost you 8.5%, 8.25%. How do you know that, Richard? Because my baby sister, she getting a loan. And I just looked at the loan documents yesterday. She's buying another piece of rental property to run her business out of. That's the only reason I'm not against this. She is buying a piece of real estate that will generate $200,000-$300,000 a year in cash flow. But she's getting an 8.25 interest rate. Yeah. The only reason that can work for her is because the business that she's putting inside of that rental property is a cash cow. It really is. She's in a segment of business that it's a cash cow. That's the only way she pulls it off. What about your regular smuggler business that's already struggling, but I got to go out and pay 8.5% for? You can't do it. The only reason she can pull it off is because it's a cash cow. And that's the only reason I'm saying do it. Other than that, I would be like, listen, sis, just rent a place. Don't buy nothing, rent it. I'm telling her to buy it now because she has a cash cow as a business that can afford it. Plus, she got a better deal because why? The seller of the property got seller fatigue. He ready to get out of this thing. So he discounted the property for her to buy it. Guess what? That 8.5, yeah, it's a high rate, but guess what? When rates come down, all she got to do is go in and refinance it, which she will do. So my point is, opportunity, guys, is here. This ain't just me reading a book. I'm telling you real life, it's there. My sister just did it. And she got a business that she created out of thin air. I believe she created that business, I don't want to say around 2020. But the business it's a great business. So don't tell me people can't create businesses and do, yeah, they can. My sister just did it. And she's just like you and I, regular people, had a skill set. She had a skill set, a unique skill set that she was making somebody else rich with her skill set. That's what she was doing. She was managing somebody other person's business for them. While this lady was off doing whatever, my sister was managing all this stuff. And guess what? Her and I talked and I said, listen, you got the skill set, do your own thing. Start small and then just grow it. And that's what she did. She took her skill set from making somebody else wealthy, turned it around, did the same exact thing she was doing for somebody else on a small scale and just started growing it. Now she is making herself wealthy. This is her third house in less than 4 years. This is the third house she's buying, and it's going to be a cash cow. They're all cash cows. Why? Because, guys, if you have a skill set and you're making somebody else wealthy with that skill set, why? Please tell me why I got a skill set that I'm doing for somebody else and making them rich when I can turn around and do that for myself and make me rich. Please, somebody help me with this one. I can't understand. No, I can't understand it. I can't understand it. I can't understand it. People are afraid to bet on themselves. That's what it is. People are just afraid to bet on them. See, they've gotten this cushy thing where, okay, I'm going to get this check. I don't really like it, but I'm going to get this check. I'm good at it, so I know they're going to keep me. Cushy life, but see, you don't build no wealth that way. Not if you want to speed up. See, my sister went from basically no wealth, right? No significant wealth to now she's, going to knock Big Brother off here in a minute. She going to knock me off here in a minute. She keep on the pace she on, she going to knock me off. And I'm rooting for her. I love it. I love it. That's why when I hear all this crap about, oh, I can't, no, that's just crap, man. Yeah, you can in this country. I don't care what color you are. I don't care what color you are in this country, boy. Listen, man, you can make it happen. You can make it happen. I don't care what color you are. I don't care where you come from. If you live here in the United States now, ain't nothing stopping you but you. That's it. All right, let's move on. Let's move on. Stocks are headed for their first losing month since October, as rate cut expectations significantly from where they were at the start of the year. The Dow is on pace for more than a 3% loss in April. The S&P and the NASDAQ are headed for declines of more than 2%. Can somebody say opportunity? Does anybody see that as opportunity? Or is it just me? When I read this, does anybody else, does it click into your head, oh, golly, what opportunity? That's a great opportunity. Or does it be like, oh, golly, I gotta sell my stocks. I gotta get out of there right now before it's too late. Which one, where you at? Doomsday or opportunity? I'm gonna tell you where I'm at. I see it as opportunity. When I read this kind of stuff, I'm like, woo, this is opportunity. What a great opportunity for me to build wealth. When you look at the size and the scope and the scale of the rally off of the October lows, then you layer on top of it the stickiness of inflation in the end. I wouldn't be surprised to see some dampering on the market for a little period of time. There's plenty of economic news on the docket this week, with Fed policymakers convening for their two-day policy meeting, which we talked about. The central bank is broadly anticipated to keep interest rates steady, which we talked about. But traders, when they say traders, guys, they're talking about investors. But investors worry Fed Chair Jerome Powell's post-meeting comments will lean more hawkish. Remember, we talked about that yesterday. I said on Wednesday at 2:30 Eastern Time, May 1st, Fed Chair Jerome Powell will be talking to the American people and whoever else want to listen. And I said this yesterday, the market will wait and react to what he says. Either he's going to be hawkish or he's going to be dovish. Hawkish means we're going to keep rates higher for longer. We have no timetable to reduce rates. We're not going to commit to any rate cuts this year. That's hawkish. Dovish is, hey, we still anticipate 2 to 3 rate cuts this year. We still like our pace of bringing inflation down. Yes, we're going to keep rates higher for longer, but we still foresee 2 to 3 rate cuts this year. That's dovish. We'll know tomorrow. I told y'all that's what you're looking for. That's what everybody is gearing up for right now, is tomorrow at 2:30 p.m. Eastern Time. Everybody knows they're not going to increase rates. Everybody knows they're not going to decrease rates. So no one care about that. What people care about, big boy investors care about, big girl investors, what they care about is what the Fed chair is going to say at 2:30 Eastern Time on May 1st. That's what they're waiting on, because that's going to tell them the direction. That's going to give them forward guidance. That's going to tell them if they back in or if they stay out in treasuries. Just telling you. Either way, I win. Either way. Why? Because I already got a lot of money in the stock market. So if they come out dovish and everybody run back to the stock market and run prices up, I make out like a fat rat. If they come out hawkish and everybody runs from the stock market and runs to U.S. Treasuries and the market goes down, guess what I do? I go to the reserves, plump another bunch of money into discounted assets and wait for them to go back up in a couple weeks. So I'm going to win either way. That's why I tell you guys, you got to be positioned and you got to have cash and you got to be ready to go. You got to be ready to execute. You got to know what you're going to buy. So I already know what I'm going to buy. I already know what I'm going to buy. So here we go. Here we go. There's plenty of economic news on the docket for this week. The Fed policymakers, their two-day meeting, the central bank is anticipated to keep rates steady, blah, 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 blah. The busiest week of corporate earnings is set to continue, with Amazon and Apple reporting their quarterly results today. Amazon and Apple, are you ready? That's part of the Magnificent Seven, right? We got the Magnificent Seven. Microsoft already reported, Meta reported, Tesla reported, Alphabet reported. Now today we got Apple and Amazon, and then guess what? We got the big 900-pound gorilla in May. And I told y'all yesterday, I'm ready. I'm ready for May, boy. I'm ready for NVIDIA's earnings report. Q1, fiscal year Q1. Oh my goodness, I cannot wait for that, because I think it's going to be a really, 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 really good day. I'm optimistic. I think they're going to meet expectations. I think they may even exceed expectations. And if they do, stock price goes to $1,000 a share. That's my opinion. I'm not your financial advisor. I don't know this for a fact. I don't know nobody at NVIDIA. All I know is I'm just a guy who likes the stock. I'm a guy who believes in, I believe in the growth. I believe the growth will continue, especially based on what I'm gonna read here in a second to you about some of these companies in the Magnificent Seven that are really close to NVIDIA, and what NVIDIA is doing in the AI space and the chip maker space. They're close. They're close to these folks. So you got Apple and you got Amazon today. Thursday, respectfully, Tuesday and Thursdays. So maybe Amazon today, and then maybe Apple on Thursday. It says Amazon and Apple reporting their quarterly results Tuesday and Thursday. So maybe Apple on Thursday. The April jobs report is also expected at the end of the week, which is Friday. See, we got a lot of stuff coming, man. We got the Fed meet. We got two big boy giant Magnificent Seven guys coming out with their earnings report, which could shift the market, right? And then you close out the week with the jobs report. Just incredible stuff, right? Just incredible stuff for us to build wealth. And again, don't sleep on McDonald's, guys. If it's down, go look at a little bit of history of McDonald's and what it's done. Might be an opportunity to pick some up at a discount. I don't know. Go check it out. That's just one for you to keep on the watch list. So let's move on. And last thing we're going to cover, and then we're going to get out of here. By the way, get down to that description box. Click on that Mumu link. Go get 10 free fractional shares of the Magnificent Seven, guys. It's for free. All you got to do is sign up for Mumu, put $100 in your brokerage account, and get your free 10 fractional shares of the Magnificent Seven. What are you waiting on? Nobody else out here in the market is going to give you this offer. Nobody. No other brokerage app. None. Except Mumu. Get down to the description box. Click on that Mumu link. Position yourself. Get your mind right. Get your financial house in order. Get your portfolio started with 10 free fractional shares of the Magnificent Seven. All right, let's move on. Here's the last thing we're going to cover, and then we're out of here. Tesla, Meta, Microsoft, and Alphabet all just shared magnificent news for NVIDIA investors. Now, when you listen, guys, if these four companies do what this article says they're going to do, I'm telling you, man, NVIDIA is going to go through the roof. They're going to go through the roof. They're going to go through the roof. Here we go. Four of NVIDIA's biggest customers highlighted the growing demand for AI infrastructure. That's the business NVIDIA's in, guys. They're in the AI infrastructure business. Four of their biggest customers. I don't know. I keep telling y'all what's coming. I don't know. If you didn't think the demand for artificial intelligence could get any stronger, think again. Four of the biggest tech companies in the world all reported very strong demand for AI applications, and that's great news for NVIDIA. The chip maker designs the leading GPUs for training the large language models powering new generative AI applications. Boy, that's a lot. That's a lot. I ain't that smart. That's a lot. It could see a big increase in business based on recent management commentary from Tesla, Meta, Microsoft, Alphabet. Here's what they had to say and what it all means for NVIDIA and its investors. Investors like your good old boy Richard Fain here. Love it. Like your boy Richard Fain. I'm gonna get rich. I'm gonna get so rich with NVIDIA. I am. Here we go. Tesla plans to increase its NVIDIA chips by 140%. Listen, man. Here we go. Here we go. So you got the number one valued company in the world, Microsoft. Microsoft. Number one valued company in the world is Microsoft. Number 4 valued company in the world is Alphabet. Number 7 most valuable company in the world is Meta. Number 15 most valuable company in the world is Tesla. And they're all customers of NVIDIA. Come on, man. Can y'all put this thing together? I'm trying to help y'all put it together. I'm really trying to just put this puzzle piece together for you. What's getting ready to happen? Tesla plans to increase its NVIDIA chips by 140%. Tesla plans to unveil its robo-taxi in August. The Cybercab relies on Tesla's full self-driving capabilities, which are artificial intelligence to make real-time driving decisions. To train that AI, Tesla has rapidly expanded its AI training infrastructure, says CEO Elon Musk. Says the company doubled its training compute power sequentially in the first quarter. What's more, he expects Tesla's cluster of 35,000 NVIDIA H100 GPUs to expand to about 85,000 by the year end, just for training its AI. Guys, listen, man. Listen, man. Okay, let me just keep reading. Listen, man. Pay attention to this stuff, man. This is where we gotta be ready, right? We see. Once Tesla do all of that, it's too late. If I'm an investor in NVIDIA, I want to make my investment right now before any of this happens. Because if it all happens, and I'm not saying it all will, but if it does, guys, I'm telling you, in my opinion, that's a win for NVIDIA. That has to increase their market. It has to increase. Listen, it has to increase their value. They're already the 3rd most valuable company in the world right now, behind Microsoft and Apple. NVIDIA's 3rd. That's a huge investment coming NVIDIA's way. It's also a major endorsement for NVIDIA from Musk, who had previously considered other chip makers. So now Tesla, for all their taxi cabs, their robo-taxi cabs, or whatever they call them, they're going to be buying more GPUs from NVIDIA. Okay, let's talk about Meta. Let's talk about the second one, Meta. 7th largest company in the world from a market share standpoint. Not a market share, but a market cap standpoint. Meta needs to spend more to become the leader in AI. Meta has been spending heavily to build out data centers to train its artificial intelligence, but now it sees a good reason to spend even more. Alongside its first quarter earnings release, Meta shared plans to increase its capital expenditures from its original range of $30 billion to $37 billion to somewhere between $35 billion and $40 billion when all is said and done in 24. And the company expects to spend even more than that in 2025. That's because CEO Mark Zuckerberg sees an opportunity for Meta to build leading AI models and be the leading AI company in the world. Meta has made excellent progress in just a few years developing its LLAMA large language model. It recently released version 3 of the model, rolling out its Meta AI chatbot alongside it. Zuckerberg thinks there are a lot of business opportunities for Meta if it can build an AI model used by hundreds of millions of people around the world. But to get there, it has to spend heavily, and a lot of that spend will go towards NVIDIA's chips, at least for the time being. Meta's also building its own custom silicon to train its AI. So there's another one. One more. No, we got two more. Microsoft is seeing more demand for AI, and it's about, we're not going to go into everything Microsoft doing, but let's see what the financial commitment is. So it says, again, a lot of step-up spending will go towards more NVIDIA chips for its cloud customer needs. Microsoft, however, does design its own chips as well. So then the last one is Alphabet. Alphabet is already spending big to stay on the cutting edge. Let's say here, but one should stand out to NVIDIA's investors. Apple poured $12 billion into capital expenditures last year. That's nearly double what it spent during a year ago. Guys, I'm telling you, it says right here, it's worth noting Alphabet uses its own chip designs to train its Gemini model, but it also will commit some spending to NVIDIA as its cloud customers demand those chips. So there you go, man. There you go. I'm about to get y'all out of here, but I had to give y'all that little bit about NVIDIA because y'all know I'm heavy NVIDIA, man. I'm a heavy NVIDIA guy. But hey, man, here's the thing. A lot of opportunity out there. Position yourself so you're ready to take advantage of it. Don't worry about it. Just position yourself. Get yourself financially ready. Get you some cash, get you some multiple streams of income, pay down some of this credit card debt, pay down some of this consumer loan debt, and get yourself ready and get yourself in a position. That's up to you. That's up to you. Personally, for me, I'm ready. I'm buying and I'm ready. My next catalyst for me, big buy, is going to be before NVIDIA's Q1 earnings report. That's when I'm ready. I'm ready, right? And until that happens, I'm just going to continue buying, right? Every day I'm buying $100 to $300 worth of SPLG and FTEC. Those are my ETFs that I'm buying. So every day, $100 to $300 that the market is open. Every month, I'm dollar cost and averaging in a big chunk of money to my normal my normal 50, 30, 20. Right, my normal 50, 30, 20, I'm putting a bunch of money in every single month, dollar cost averaging into that 50, 30, 20. And then I got the every day where I'm just doing the ETFs. And then I got the big cash on the sideline, just buying NVIDIA, just buying Tesla for right now. That's it. That's the plan. That's the whole plan. And by the end of this year, I'm going to be up. I'm going to be up big time, I think. Either I'm going to be up in shares, waiting to explode at some point in the future, or I'm going to be up in net worth. I don't mind being down in net worth, but have more shares that will explode sometime in the future. I'm okay with that too. I'm okay with that. I ain't got no problem with that because I know at 10 years from now, which is my wealth transfer blueprint, 10 years from now, it's all going to pay off for me. I already know that. I believe that, but I'm positioned. You got to get positioned. And I told you exactly how to get positioned. I told you exactly how to get positioned. Do not allow this information right here to put you in a gloom and doom. No, look at this information as opportunity. My job here is to create opportunity for you. Tell you what's happening and show you the opportunity in it. It's not just reporting gloom and doom and just saying, okay, good luck to you. That's not what I do. I report what's happening, and then I show you, here's the opportunity, guys. Go get it. But it's up to you to go get it. I can't make you go get it. You got to go get it. I can't make you get down in the description box and click on the Mumu link and get these 10 free fractional shares of the Magnificent 7 stocks when nobody else in the world is giving you that. I can't make you do that. You just gotta see an opportunity and act on it. Some people won't see that as an opportunity. Oh, I use TD Ameritrade. Why would I leave TD Ameritrade? Don't leave them. But I guarantee you they ain't giving you no free stock. I guarantee you're going to do the same thing on the Mumu app you can do on Ameritrade. Maybe more. I don't know that because I don't use Ameritrade. But I'm just saying, we always try to figure out a way to get in our way. Get down to that description box, click on that Mumu link. Get them 10 free fractional shares of the Magnificent 7 for you people that are new. just checking me out. That's the brokerage app that I use. Then send me an email and say, hey, Richard, I opened my Mumu account. I'm a little intimidated. I'm not quite sure how to use it. Then I'm going to send you a Mumu tutorial video to walk you through how to make your first trade and walk you through the app. Now, I'm not an expert. Mumu's the expert, but I will give you what I know. And then if you need more information, let me know, or you go right to customer service on the Mumu app, tell them what you're looking to do, and they will provide you the information because they're the experts. It's their app. I didn't create the Mumu app, guys. I just use it. So I'm not the creator of it. I'm not the customer service guy. I'm not. I'm just a guy who uses it and tells people about that I use it, right? So my thing is get down in the description box, click on that Mumu link, go get that free stock, go get that free money. And then while you're down there, click on the website, the Richard Fain Millionaire Mentor website, www.richardfain.net. Go check that out as well. Go check out the digital products. Just this morning, I had another 2 or 3 of y'all checked it out and made some purchases and invested in yourself, because that's what it is. Oh, golly, I can get some of that information online. Well, go get it online then. I mean, people try to like they got you. Oh, I got you. You ain't got me. Anything you want to know, guys, in the world is online. Anything you want to know in the world is online. But guess what? You got to find it. That's number one. You got to find it. And then you got to be able to break it down and apply it to what you're trying to get done. That takes a lot of time. My job is to collapse time frames for you so that you can go to one place, grab it, and you ain't got, oh, I want to fix my credit. Okay, that's online, guys. You can go figure out online how to do that. But now you got to navigate the shark-infested waters. You got to navigate them shark-infested waters of the internet. Because just as soon as you type in that, guess what? You're going to have every great white shark in the world, in the internet world, going to come after you. Every great white going to come after you, and you ain't going to know which great white is friendly or which one will eat you. You ain't going to know. Is that a friendly great white? Or is he going to eat me? You don't know. You don't know. That's the chance you take when you go on the internet trying to find stuff. You got great white sharks out there that will tear you to pieces from a financial standpoint. I was talking to the same lady that I was talking to yesterday. She was telling me somebody charged her $1,500 for a consult. Then they wanted to charge her $7,000 a year to manage her money for her. And she, of course, she's a smart lady. She didn't fall for that. But this is what you got to go through out there, guys. Y'all got to get out there and see what's happening out there. I provide this information every single day for free. And people still trying to tell me what I got to do on my channel. And I provide the information for free. It's free. Other than me saying, hey, check my links down in the description box. That's the only thing I ask you guys to do in these live streams. Check my information down in the description box. Everything else is free. All of this information for 2 hours is free. But that ain't good enough for some folks. We want the 2 hours worth of free information, but we don't want to hear about your, no, you find you another channel, because I'm going to tell you about my links down in the description box. That's the trade-off. See, this is a win-win here, guys. I give you free information that can help you get to freedom. You get to hear about what helps me get to freedom. Why is that such a bad thing? I'm helping you get to freedom. You help me get to freedom. More freedom. Isn't that a fair trade-off? I think it is. So get down in the description box and look at my links. And if you want to try them, try them. If you don't, don't. Appreciate you. Lock it in with a thumbs up before you get out of here, guys. Appreciate you. Appreciate you. We'll be back tomorrow, of course. Same time, same place, different information, but not really, right? Different information, but not really, because guess what? We learn by repetition, guys. We learn by repetition. That's how we learn. We learn by repetition. So appreciate y'all rocking with me. Lock that thing in with a thumbs up before you get out of here. I would certainly appreciate it. Hope to see you guys back here tomorrow at 10:30 a.m. Eastern time. We're going to talk about day one of the Fed meeting and kind of what's rumbling. We're going to talk about stocks and how the stock market has positioned themselves for Wednesday's conclusion of the Fed meeting, right? Because we know stuff is going to happen today in the market to position itself, right? So we're going to talk about that tomorrow morning. And then on Thursday morning at 10:30 a.m. Eastern time, we will talk about the actual decision from Wednesday of the Fed. And that'll kind of wrap us up for the week. So appreciate you, man. Lock it in with a thumbs up before you get out of here. If you appreciate the content, you appreciate me out here every day in these YouTube streets. Y'all appreciate me out here every day in these YouTube streets trying to get you guys some information, right? If you appreciate me out here every day in these YouTube streets, lock it in with a thumbs up if you don't mind. Lock it in before you get out of here. That really will let me know you appreciate me out here in these YouTube streets every single day trying to give y'all content that can get you the pot of gold at the end of the rainbow, right? Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm going to catch you guys on the next one. Peace.